So let's continue. Uh, Now, if we are talking about not-for-profit organization, so now we have understood that there is no aspect of earning profit, but when profitability is not counted, does it mean to say that um, there is no accountability? In spite of do not they not having this profit objective, but yet their performance is still measured. So that is measured by way of, I have mentioned that it is about value for money. There are 3 E's which are counted here as part of value for money. The first E talks about economy, the second E talks about efficiency, and the third E talks about effectiveness. So let's look at what these 3 aspects of value for money are all about. The first one, the first E talks about, I hope I'm audible.
Yeah, ma'am, you're audible.
Economy. The first E talks about economy. See, here, just because there is no profitability, see, profit is sales minus cost is profit. See, even if they are generating some amount of revenue also, uh, that is only for the purpose of again providing some benefit to the stakeholders, but it is not with an intention of maximizing their profit. So in such a situation, does it mean to say that there is no need to put an effort to minimize on the cost? Economy, the first E talks about economy. So does it mean to say that there will not be any measures in terms of minimizing on the cost? No, there is, the performance is measured in terms of whether there is any effort put in to minimize the cost, economizing on the cost. See whether they would be saving the cost or not, economizing the cost. Economy, that's the first E. The way it would be assessed, the way it would be measured, the performance aspect of it will be looked into from the point of whether there was any effort put into economize on the cost. The second E talks about the efficiency. The efficiency would be as much as the input is introduced, are they getting the output? See, what's the output? Whatever is the purpose, whatever is the objective which they want to achieve, as much as the effort which is put in or the inputs that are put into, are they realizing the output in the same measure or not, is what is looked into. The measurement of input versus output, efficiency. See, for all the costs which they are spending, is their purpose achieved? Did they achieve their objective or not? Is about efficiency. Finally, effectiveness is, they would be effective when the the two aspects, that is economy and the efficiency part of it, both of them clubbed together, we can call that to be as effectiveness. Economy plus efficiency is called as effectiveness. So that's how the performance is measured in case of a not-for-profit organization. So not-for-profit organization may make surpluses, but this is not the main objective. Then it says that not-for-profit organizations still need to use resources efficiently and effectively. See, which means that they have to minimize on the cost, the way the costs are spent, and they also have to ensure that they are using these resources efficiently, effectively. Okay, efficiently, as much input as it is used, to that extent, the output also should be generated. Then together, that is putting an effort to minimize on the cost and the output measurement together is the effectiveness, whether they are effective or not. Okay, profit-seeking organization may have other objectives. The notion of ethical business or green businesses, these will not be subordinate to the profit motive. So, I mean, I mean, the concept of it, can we rule out that profit-seeking organizations only look at profit maximization, and service organizations or not-for-profit organizations aim at not earning profit? We cannot categorize them. See, off late with the concept of CSR picking up its importance, we also see that organizations are into various other ethical activities. The business ethics are very strictly followed. Then there are certain responsibilities which they take up towards the other stakeholders apart from the shareholders, the owners. They also have they exhibit a responsibility towards others, like for their benefit, a value being provided to the customers. Starting from that, we see that they provide some benefit to the society at large, or certain aspects of sustainability plans, etc. So there are other objectives also. We do not straight away rule it out and say that profit seeking organizations do not aim at welfare activities. They also are part of the profit seeking organizations, but here we see that the sole purpose of a not for profit organization being established is to provide service. There's no other aspect here. Of course, this is also a part of the profit seeking organization. As part of their existence, they also may strive to provide certain benefit to other stakeholders. Okay, so completely it is not that services are provided only by NFPOs and then not by profit seeking organization. We cannot state that. Okay, the objectives or constraints, it says that many NFPs, not for profit organization, NFPs, not for profit um, organization, O also is sometimes it's also recorded as NFPOs. See, they view financial matters as constraints. See, here the reason why is the reason why this would be looked at as a constraint is the aspect of profit is definitely not taken into consideration when it is not a primary objective. So the performance measurement here in this case is it related to the maximization of profit or not? So doesn't mean to say they are allowed to take up anything and then spend the money in any possible manner, any fashion. No, there is still accountability there. We cannot look at this part of it as because profit is not their primary objective, they are allowed to do anything. That is definitely not the criteria, because the first aspect of value for money economy comes into picture, where economy talks about they have to take in all possible measures to ensure that costs are incurred according to whatever is set as a limit for them, whatever is the limit or criteria which is decided for them. They have to spend according to that. That is the uh, criteria here. See, here it says that many NFPs view financial matters as constraints under which they have to operate rather than objectives. Now, so hospitals seek to offer the best possible care to as many patients as possible, but subject to, again, the part of it, economy, subject to budgetary restrictions imposed upon them. So here we are not allowed to spend money as they like to spend. See, under the shelter that under the cause stating that their existence is to provide service, so that is not entertained, that is not acceptable. See, their primary objective is definitely to provide service, but they should work under a constraint, under a limit, under a budgetary control to economize on the cost. See, without economizing on the cost, there may be a possibility that the set goal or objective or purpose is not achieved. So that is one thing what we have to look into. Okay. uh, Subject to budgetary restrictions imposed upon them. Then it says that councils organize services such as refuse collection while trying to achieve value for money with resident uh, residents council tax. Do not collect any kind of revenue. So this is another example which is given. Then charities may try to alleviate suffering subject to funds raised. Okay. Um, so they um, as part of value for money, we see that um, though the primary objective of maximizing profit is not present, that should not uh, be taken as a reason or a cause for them not to perform uh, up to the optimum extent. So that cannot be a reason or a cause for them not to achieve their objectives. See, achieving their goals and objectives is the primary objective, that is to provide benefit or service to their stakeholders. But then again, all efforts have to be put in to ensure that they minimize on the cost part of it. They work within the limits that are set for them. Then it talks about uh, in most situations not making any amount of revenue, not collecting any funds for the efforts that they have put in. They collect all the and put in all efforts to ensure that the resources which are available with them are utilized for achieving the purpose. So that is the aspect of not-for-profit organization. See, very generic, there is nothing new, but vaguely what we remember, what we learn, we put it all under one heading. So that is about not-for-profit organization. If it is profit organization, if it is a profit-seeking organization, so how do we assess the performance of those organizations which are established with an intention of maximizing on the profit? So that also we need to look into this one. See, an organization which wants to maximize the profit. So if we are looking at in that particular aspect, see here there would be an effort. There would be an effort to put it to earn maximum revenue and minimize on the cost and maximize on the profit. So, companies have the primary objective of maximizing shareholders' wealth. See, one of the objectives of financial management is to ensure that the profit that is available or the profit that is earned for the shareholders is maximized. The profit, or at a broader level or broader sense, it is the wealth which has to be maximized. Okay, so companies have the primary objective of maximizing shareholder wealth. It says that to achieve this, the company's manager should take decisions that aim to lead higher share prices, higher dividend payments. So when we have looked at about organizations, we have looked at the social arrangement could be um, different types of organizations. This could be individuals coming together, partners coming together, or shareholders. See, from the perspective of a company and the owners of the company who are shareholders, if we are looking at the company's perspective, company's point of view, shareholders' wealth maximization is the ultimate goal for any company, for the management. They work towards maximizing the profit or the wealth of the shareholders. Now, how does it happen? How is the wealth of the shareholders maximized? Wealth of the shareholders is maximized when the share prices are higher. I do not know whether you will be able to pick it up quickly at this point of time, but nevertheless, I will still put an effort to explain this one. See, here it says that to achieve this, the company's managers should take decisions that aim to lead to the first one is higher share prices, the second one is higher dividend payments. Um, when the company generates revenue, see revenue minus all all possible costs, that is operating, non-operating, all of them that are deducted. See, that would be the profit available to all the investors. See, from the profit available to all the investors, first in the priority in the order of uh, paying the returns to them, outsiders or debt holders are paid their interest. Then we see that see, if at all, if preferred shareholders are there, their dividends are discharged. Then the amount that is available is the profit of the ordinary or equity shareholders. See, this you must be having some knowledge about that. See, this profit that is available to shareholders has to be distributed to the uh, ordinary shareholders. See, it all belongs to the ordinary or the common equity shareholders, whatever we call it as. See, it is the profit that is available to them, but it is not an obligation for the company to distribute the entire amount of profit to shareholders. See, um, there is no such obligation. Ultimately, it belongs to that, but obligation to distribute it in the current period is not a criteria which has to be taken into consideration. See, if the dividends are not distributed immediately, shareholders would feel dissatisfied. If the dividend payments are not distributed immediately, if there is a promise, if there is a promise to distribute these profits at a later stage, in that case, see, many investors or many shareholders would feel dissatisfied. See, if they feel dissatisfied, they may also go to the extent of selling away their shares, because see, there is a saying which says that a bird in hand is worth more than two in the bush. See, what return they can earn now is far more valuable to them than waiting for a later date and getting a better return. If the profits are not distributed to ordinary shareholders, these profits would be reinvested into the company. With the more amount of investment, more would be the profits. So better profits will be earned. There is no doubt about it. But they would not want to wait till a later date, but would want to earn the dividends immediately in the current period. Therefore, that can cause some dissatisfaction among them if dividend payments are not made immediately in the current period. So that can result to dissatisfaction. Dissatisfaction can result to they withdrawing their investment. So that is, they can sell away their shares to other investors in the stock market. If such a thing happens, it reflects that the demand for the shares of that particular company has reduced. If somebody is interested in selling away their shares, it indicates that the demand has reduced. When the demand falls for the securities shares, the price also falls. So the price falls, then it would um, it would again reflect 4% poor performance of the company. So here two aspects are important, that the share prices should be higher, because when the demand is high, the share prices would be high. When would the demand be high? When the present shareholders are satisfied with them, the company is performing very well, the company's profitability position is very good, then the demand would be high. When the demand is high, the prices are high in case of shares. See, then when would the shareholders be satisfied? When they are paid better dividends. So higher dividend payments also will uh, create the scenario where the shareholders are satisfied, and if their shareholders are satisfied, better um, performance of the shares in the stock market. So that can assure them that can assure them uh, of better share prices in the stock market. What are the considerations? If we are looking at the shareholder wealth maximization, what considerations would be there? Attempts to measure and increase shareholder value have focused on incorporating three key issues. The first one, cash is preferable to profit, as I have explained. See, if they are paid um, their dividends, their returns in the current period, that will make them happy. That will be the result of their satisfaction. They would be satisfied here. Cash is preferable to profit. Then we see cash flows have a higher correlation with shareholder wealth than profits. Um, see, the correlation, see, cash flows and shareholders' wealth has a correlation. The reason I have explained to you just now, see, if they are paid a return now, if their dividends are distributed in the current period, immediately they would be satisfied. See, even if they are not distributed now, it ultimately belongs to them. There is no doubt about it. This is not about refusal of payment of the profits which are available. These profits would be reinvested into the business. This reinvested with the reinvested amount, better profits can be earned in the future. More profits will be earned in the future. More will be their return. There is no doubt about it. But the psychology that they were not paid returns in the current period can cause some dissatisfaction. So there is a correlation between cash flows and shareholders' wealth. So that we have to very clearly understand here. Then it says that exceeding the cost of capital. See, the cost of capital is a concept. The cost of capital is, see, what is the amount of return which the company pays to all its investors. The investors are debt holders, are investors. Again, debt could be different types of debt, that is debentures or bonds can be issued, loans from the banks, financial institutions, multiple ways in which debt can be raised. Then preferred capital is one thing, then equity, common equity capital is another thing. So these are on the reinvested amount, we call it as retained. See, multiple sources from which they raise funds are invested into the business. See, on all of them, there is some amount of capital paid. See, whatever is the capital that is paid on all these things, see, the average cost, see, all of them are not paid uniformly the same amount of return. Different, based on the terms and conditions, different amount of costs are paid to different investors. So in that case, what is the average cost? What is the average cost on these types of capital that is paid? So that is one aspect. See, that is called as the cost of capital. The return which is earned, the profit that is earned by the company should always exceed. Return is called as rate of return. Rate of return we denote it by a variable called as R. R should always be greater than the cost of capital. Cost of capital is denoted by a variable called as K. R should always exceed K. Okay, exceeding the cost of capital. The return must cover the cost of debt and the cost of equity, the return required by shareholders. See, managing both short and long-term perspective should be taken into consideration. Investors are increasingly looking at long-term value. Okay, so these aspects, these considerations should be taken into account when we talk about the shareholders' wealth maximization concept for profit-seeking organization. This is very with specific reference to, we are very specifically looking at the company's point of view, how the shareholders' wealth is maximized. There's nothing new. You must have done this in your graduation, isn't it, Kavya?
Yes, ma'am, it's already there. Like we have done it in accounts. Many chapters we have done it. So,
The FM also you must have done, isn't it?
yeah, yes, ma'am.
So it is, I mean, just a quick review of what you have learned earlier. So as part of the syllabus, we'll just quickly run through all that and then also take up the multiple choice questions, whatever are there. We will be covering this particular content over a period of 40 hours. So 40 hours, so comfortably, sufficiently we should be able to run through the entire syllabus. Then
Yeah.
shareholder wealth short-term measures. See how is shareholders wealth measured? See, one is called as rate of return on capital employed, ROCE. See, ROCE, return upon the capital employed. Capital employed is the amount of investment which is raised from multiple sources. Um, See, ROCE, if it is the investment raised, on this investment raised and invested into the business, what's the amount of profit earned? ROCE. See, some situations we also find this to be as interchangeably used with along with other terms like ROI or ROA. That also we interchangeably use. I'm just writing it here. ROCE is equal to R is return, so return is profit. So in simple terms, if we put it across, this would be profit divided by profit would be profit before interest and taxes, or very commonly the term what we use is called as EBIT or PBIT. See, this is the amount of profit earned for the amount of capital employed. So what is the percentage of profit earned? In situations where we do not know what is capital employed, there are other terms also interchangeably used. See, ROCE could also be, of course, technically there are differences. Right now, we are not looking into that. I'm just, highlighting in what are the situations where these things are also taken into consideration. See, if capital employed is not known, why is capital raised? Capital is raised as an investment to be invested into assets. That's the purpose. See, in such situations where capital employed is not there, profit upon the investment amount or return on the upon the investment, or sometimes if this term is also not there, we can also interchangeably use it with ROA. What is ROA? See, return upon the total assets. See, the capital that is raised is invested into the total assets. So that is the concept of ROCE, ROI, and ROA. ROCE compares the stream of profits before tax and interest payments with the value of capital employed. It thus measures the productivity of capital and the ability of the company to generate a flow of potential dividends to shareholders. Okay, so ultimately, what are we basically measuring? Whether the profit that is earned is sufficient enough to make their payment or make the distribute the returns to the investors who have contributed towards capital employed, or contributed towards the investment, or the amount that has been invested into the assets. So that's the concept here. Ability of the company to generate a flow of potential dividends to shareholders. This is how the equation is given. Okay, so there's another measure which is used called as EPS, earnings per share. Earnings per share. So just a second. I would like to put a format of income statement. So I'll just quickly open that format of income statement. It will give a better perspective about how do we calculate EPS. Was a saved format, not able to find it. I will nevertheless I will write it here, but that would have been a better. recently I got my laptop formatted, so most of the things are not available. Not able to fit. I'll quickly write the format of income statement. See, the first aspect of it is what's the revenue that is generated. So that's the first aspect. After that, from this, the cost of goods sold is deducted. Then this is called as gross profit. Then from this, operating expenses are deducted. Then this is called as operating profit. Then there are certain non-operating expenses and non-operating income. Non-operating expenses, like if there is a loss which is incurred, if there is amount transfer to provisions, reserves, something which is set aside, etc. So basically, they are not operating in nature, non-operating in nature. So we see that certain non-operating expenses that are incurred also have to be deducted. Non-operating expenses. Similarly, we see that there are non-operating incomes also. Like as I mentioned that um, gain on sale of assets, or there is some other source of revenue generated, like maybe they receive dividends, they receive commission, they receive interest, etc. That is not from main operating activity. So that is non-operating in nature. So non-operating incomes or gains, these things have to be adjusted. So the resultant figure is called as EBIT, done, earnings before interest and tax. The first preference that is given to is to the debt holders. So here we see that the first one is less interest. So the resultant figure is called as EBT. And then from this, the next preference is given to tax, that is government, the amount of tax that is paid. So this is called as EAT, earnings after tax. Next comes in order according to the preference given to the preferred shareholders. We see that preferred dividend is deducted. Okay. Then this is called as net income of ordinary shareholders. Ordinary shareholders or the common equity shareholders, whatever we call that. So ordinary shareholders, net income of ordinary shareholders. Done. Um, from this also, less equity dividend or common equity dividend, what we call it as. Not see, this belongs to them, but it's not necessary that the entire thing would be distributed in the current year. There may be situations where the entire thing is distributed to the shareholders in the current period. There is no doubt about it. But some of them may not be distributed. Most of the time it's not distributed, because when some amount of profits are retained in the business, that can be useful. It comes handy to them whenever they have to reinvest in the business or meet some contingencies. So in such situation also it comes handy to them. Therefore the aspect of not distributing the entire profits but retaining some of them arises here. Okay, if this is the format of income statement, we see the concept of what is the earnings that are available to the shareholders, earnings per share. See, profit after tax, interest, and preferred share dividends. So, do you see that? See, the profit that is available to all the investors is called as earnings before interest and tax. Out of that, see, interest is distributed. Then comes the next preference is tax is distributed. Then we see that even the preferred dividend is also distributed, because preferred shareholders have a fixed percentage of dividend at the time of issue. There is a fixed percentage of profit which would be distributed to them as preferred dividend. See, that is again subject to availability of profits. If profits are available, that amount will be paid to them. If profits are not available, then again the company is not under any obligation to meet the preferred dividend. That is also there. Okay. Then we see that, see what is the amount of net income available to ordinary shareholders. This is the concept. See, net income of ordinary shareholders, how much is available. So the total amount divided by, we see the number of ordinary shares gives us what is earnings per share, divided by the number of ordinary shares or common equity shares. EPS is equal to profit after tax, interest, and preference share dividends divided by the number of shares. Now, shareholder wealth, long-term measures estimate long-term future cash flows and discount at the cost of capital. See, because the financial management aspect of it also is taken into consideration, we would be using certain techniques of financial management. So if cash flows are expected to be generated in the future, how do we consider that, and then assess or calculate the value of share capital as on today? But in the short period, in the short term, how is the wealth, shareholder wealth calculated or assessed? Is one way is to measure what amount of return was earned for the amount of capital invested into the business, ROCE or ROA or ROA, whatever is the measure which is used, or variable which is used to measure the performance. That is one way of doing it. Another way of doing it is by way of calculating what is earnings per share. Earnings per share is equal to the total amount of earnings available to ordinary shareholders. We are not measuring it for any other type of investor, but we are very strictly very focused on measuring what profits are available to the ordinary shareholders. Okay, divided by the number of shares. Okay, at this point of time, see who are stakeholders, etc. Also, we will be discussing. See, all of them will later on also be repeated later on when you are looking into other papers. These things would be repeated, but at an elementary level, we would be looking at what is the basic meaning of stakeholders. What kind of a strategy has to be adopted in terms of dealing with stakeholders? Then what's the concept of corporate governance, etc. So those things also we will be looking into. But in today's class, quickly, first we will run through a few objective type questions from the exam kit. After we discuss the related questions from the exam kit, we will again come back to this PPT and then take up the other topics. Very quickly, let's take it up and then answer this. Which of the following is not a key feature of an organization? There are 3 points about organization. We see it is a social arrangement with controlled performance to achieve collective goals. So which one is not a key feature of an organization? This is not a feature of organization. You can also participate in the discussion Second one says that the public public sector is normally concerned with which of the following: making profit from sale of goods. We talk about public sector, wherein their main aim is to provide a service, take up welfare measures, etc. Work towards providing welfare measures, etc. A says making profit from sale of goods. B says providing services to specific groups funded from charitable donations. C, the provision of basic government services. D says raising funds by subscriptions from members to provide common services. Which among them is
C, ma'am. Provision of basic government services.
B or C? Please answer it, whether it is B or C. A is not the answer. D is also not the answer. So some amount of confusion between A, B, and C.
It's B, ma'am. It says in the B, it's to a specified groups.
The point highlighted here is public sector.
Public sector, yeah.
So it is government. So the role of government is seen in public sector. Private sector also is involved in providing services. So then they are called by a different term. See, if the organization is a private organization and they are involved in providing services, we see that they are called as charities, clubs, mutual organizations, etc. So now it's not a private organization, but it is run by a government organization. So on that note, we go with C. Third one says, which of the following statements is correct? Non-for-profit organizations are only found in the public sector, are only found in the private sector, can be found in both public and private sector. Not-for-profit organizations cannot survive without profits. Which one is correct?
B, ma'am.
Consider the following list of different organizations: government departments, partnerships, charities, and companies. Which of these organizations would normally be classified as both a not-for-profit organization and private sector organization? Private. So what do you think? Which one do you think? One can be ruled out. See, one will not be there in the picture at all because they are focusing on private sector organizations. So government department in any case will not come. So wherever one is there, we can rule it out. So now we are left with B and D.
Yeah. Partnerships are there and charities. It's D option.
Okay. So what's B option? B option has three only charities. Two is partnership. See, partnership again can have an objective of profit earning. See, it should be not for profit. Both of them should be satisfied, not for profit as well as private sector. So it is only charities. So only charities is with B. Consider the following statements. Not-for-profit organizations have varied objectives which depend on the needs of other members or the sections of the society they were created to benefit. Second statement. The primary objective of government-funded organizations is to reduce costs of their operations and thus minimize the burden on taxpayers. Which of these statements is or are correct? Is it only one or two or both or neither? Which are correct?
First one is correct.
Okay, we can go with first one, correct? The NFPOs have varied objectives, depend on the needs of the members or sections of the society. So it is only to provide benefit to someone. That is
Yeah.
that is the purpose. One is perfectly correct. There's nothing wrong with that. Second one, the primary objective of government-funded organizations is to reduce their cost, minimize
It
the
is
burden
an
on tax.
objective, but
There is no
it's
effort
not.
put in to minimize the burden of taxpayers. Their effort is to provide benefit, whatever is the welfare cause or whatever is the cause for which the work is taken up. It is not with an intention to minimize the burden on the taxpayers. Sometimes, if it is needed, the burden can further be increased. So, on that note, we cannot say that second one could be correct. So, second one is not correct. So, if it is, see, in that case, both of them correct or both of them are not correct also is ruled out. Second anyway is not correct. So we are only left with A one only is the correct answer. Okay. An example of the this I have not yet done. So um, sixth is on hold because I still have to teach you about the concept of corporate governance. Only when we discuss about what is corporate governance, we can understand about the concept of principal agent problem, agency problem. Can we understood that? Done right now. So I'm skipping this one, but when we discuss that, we will again come back to this one and take it up. Seventh question. Over the past year, the X company earned profits before tax and interest of 110,000. It has interest charges of 45,000 and a tax bill of 30,000. Preference dividends are 15,000 of were paid out, as were ordinary dividends of 5,000. X X company has 125,000 of share capital in issue, and each share has a nominal value of 0.5. So what's the formula of EPS? If we talk about what's the formula of EPS, EPS is equal to the net income available to ordinary shareholders divided by the total number of shares. See, if that is the case about EPS, denominator denominator will have the number of shares. See, they have the total capital issued as $125,000 of share capital. Each share is worth only 0.5. So how many shares? It would be double the number of shares, isn't it? The total share capital. Let's see the number of shares. The numerator, we'll talk about the numerator first. See, EBIT is PBIT, EBIT is 110,000. So from 110,000, that is available. First preference is given to the interest hold, that is debt holders on account of interest. Since all the amounts are given to us straight away, we can deduct them. See, 110,000 minus the interest charges of 45,000. Then the tax amount is also given to us. To deduct the tax amount, which is 30,000. Then deduct the preferred share dividend, 15,000. Okay, the rest of it, do we deduct 5,000? No, we are talking about how much earnings are available. It's not about what is the retained earnings. We are talking about what amount of profits are available. The EPS for that, the base is what is the profit available to equity shareholders. We are not talking about what is the amount available after equity dividend is paid. Okay, that should be taken into consideration. So here, what is the equity dividend? Ordinary dividend is 5,000, but please do not make a mistake of deducting that as well. The entire thing divided by the number of shares. See, the total share value is 125,000. If it is 125,000, The logic is one share is worth 0.5, but the total share capital worth is 125,000. So 125,000 is made up of how many shares? 125,000 into 1 divided by 0.5. On that note, here it would be divided by 0.5. Please do the math and then let me know what is the earnings per share.
The shares would be 2,50,000
That's right.
and the earnings would be 0.08.
Answer is 0.08.
Yeah, ma'am.
Done. Is that so less? 0.08? See, the numerator is 1690. Oh, okay. Let's take up this one. The next two questions are based on the following information. Dividend per share is 8.6 cents. Net profit after taxation is 17,000. Interest paid is 2,000. Odd number of ordinary shares is 70,000. Market price of shares is 204 cents. The dividend yield is okay. Now, what's the concept of yield? Yield is what's the return that is paid? See, dividend yield, earnings yield, these are also variables or ratios that are used to measure the performance in the short term. How much dividend was paid? So that is basically what we are trying to look into that. What is the amount of in the short run? I'll just take you to the Word file. You can also make mention of certain things. See, in the short run, apart from anyway, we've learned about what is EPS. EPS is equal to we have net income of ordinary shareholders divided by number of shares. So that part of it, there are certain other things which are also used, like we have something called as price earnings ratio. So here there is a relationship which is established between the amount of earnings that are made and what is the price that is reflected in the market. So the ratio here would be MPS, market price per share, divided by earnings per share. Already we know what is earnings per share. Earnings per share is equal to, already we've done the question also. See, it tries to establish a relationship that, see, because of this amount of profit available, it gets reflected in the stock market and the market price of shares also gets affected. If earnings per share is high, the market price per share also would increase. So that is the kind of a relationship that is established. So we see that, or another variation of price earnings ratio here would be earnings yield ratio. Earnings yield ratio.
Hello?
I didn't realize you got disconnected.
Yeah, ma'am. Sorry, it was a network issue.
I mean, these are all technical issues which arise. I think, I don't know, when did you leave? I was not even looking at. See,
No, just now, ma'am. Like after I said that 0.08, it got disconnected.
okay. From then you were not there. Um, there is another question which is given. See, the next two questions are based on the following information. There is some information about what's the dividend per share, net profit after taxation, interest paid, number of ordinary shares, and market price per share. The dividend yield ratio, the dividend yield is another thing, and earnings per share is one thing. Since we already know what is earnings per share, we can, I think we can straight away start calculating what is earnings per share. Let's put this one. Let's put an effort. I was trying to explain certain other ratios also, but let's just with this set of information, whatever is available with us, we can calculate what is earnings per share.
Ma'am, is it net profit after taxation only, right? Interest is not
Because
considered then.
there is no mention in this data about preferred share capital. See, interest is always before the taxation. As we look into this one, we see that
Yeah.
the interest comes into picture only after interest is paid. So if we have earnings after tax, it indicates that interest was already paid, because interest is a tax deductible expense. So interest, though it is given, we don't have to be worried about that, because only when interest is deducted, the balance of the amount to be tax is calculated. So we can straight away go ahead, and there's no mention about preferred capital also. So all 17,000 is available to ordinary shareholders divided by number of ordinary shares of 70,000.
So it will be 0.24. Yeah, the D option.
Okay. This is the one. See, I have started explaining about the other types of ratios that can be considered here with connection to
Yeah.
short-term shareholder wealth maximization, if we are talking about that. See, already we've learned about what is EPS. EPS talks about how much profits are available to ordinary shareholders. Done. Apart from that, there are few other ratios like price earnings ratio. Price earnings ratio is because of this earnings per share, what is the impact or what is the reflection in the stock market with specific reference to market price per share. So market price per share divided by earnings per share. So it is, I mean, it indicates that the market price of share gets affected if there are better earnings or not so better earnings or not so good earnings available for the shareholders. If EPS is good, MPS also would be good. EPS is not good, MPS also gets affected. So the same thing is expressed here in earnings yield ratio, which is given as an inverse of that. Basically, it is EPS divided by market price per share. Now, we are not asked about earnings yield ratio, we are asked about dividend yield ratio. So, see, availability of earnings is one thing. How much is paid to them is also one thing. Like I have mentioned that, see, they would be satisfied if they are paid dividends in the current ratio. If they are not paid dividends in the current ratio, in spite of profits being available, that can cause us to some amount of dissatisfaction among the shareholders also. So if that is the scenario, we have to look into what is dividend yield ratio. So dividend yield ratio is equal to, in place of earnings, we would put as dividend. So it will be DPS, DPS divided by MPS. So let's just check, that is dividend yield ratio. Let's just check about what is the dividend. DPS. DPS is already given 8.6 and MPS is also given 204. So dividend yield ratio is equal to
It's 4.
8.6 divided by 204 into 100.
into 100, yeah.
Which option? C,
C, ma'am. Yeah.
D.
C, ma'am.
C, C.
4.2.
C. Okay. We'll just take 10th question and then we'll wind up today.
Yeah.
Again, we will meet again at the same time. In the short run, companies will attempt to improve shareholder wealth by maximizing return on capital employed, NPV, normal profits, average return. It is always about the return on capital employed.
Return on capital employed. Yeah.
There are other questions also, but we can continue tomorrow and then take up the other topics also in the first chapter.
Yes, ma'am.
Okay, any doubts?
No, ma'am. Since it's the basics we have already learned, I didn't find it difficult.
These, believe me, this is a bridge course.
Yeah.